Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, Summit's Tell It Like It Is trading show. As always, I'm joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, a couple of things to get through this week. PPC is one of the most recent picks. Before we get to that, though, what is your overall assessment of the markets at the moment? They've been inching up, which is quite interesting, especially yesterday, given that there seemed to be a lot of action in the auction. What is your general sort of feeling of where we're headed at the moment?
Yeah, I think by and large things to me still look fairly bullish. We have been chopping around a little bit over the last week or so without any major direction to our market. But to me, that's more of a consolidation before another leg to the upside. That's my sense of it anyway. And we will look at our top 40 index just now and have a look at why I say that. So by and large, I think the bias is still somewhat to the upside. Just interesting that you mentioned the closing auction yesterday. What has been speculated out there, and I don't know, but it's been speculated that there was a fat finger trade in the market in the closing auction on 1.5 billion rands worth of trade.
Ouch.
And they managed to push some stocks significantly higher in the auction, and then obviously all of that sort of normalized this morning when the markets reopened again. So I don't know, maybe there's somebody out there looking for a job now, but it looked like a costly mistake that happened in yesterday's closing auction.
Ouch, because it was rather weird, and we discussed it last night, and that would be interesting and unfortunate for the individual concerned.
Yeah.
Garth, getting onto the most recent trade that you've put on for the portfolio, it's PPC. How's it working out? Is it proving a little bit frustrating at this point?
Yeah, it is. I mean, it's working fine, but it's not really doing much. It's not that it's not working. It's not that it's working particularly well either. It's just muddling along at this stage. But if we have a look at the chart of it now, what's significant here, the most dominant feature for me of this chart is this inverted head and shoulders pattern that we had over the last couple of months that formed. And then we broke up through the neckline of that pattern through 28 Rand, which then validates that inverted head and shoulders pattern and projects a higher target. And what you generally do is you take the head, or the height of the head, and then you project it up. And that gives you your target price, which in this case would be 32 Rand. So I like that from the first point of view. The other thing was that we had this upward trend going back to the July lows, and you can see that each time the stock was pulled back to that trend line, it has found support and buyers have become active. We also had the 50-day moving average acting as support at the same level, around about 27.50 to 28 Rand. So what I did, I also identified this falling wedge pattern within that rising trend, and those are typically bullish continuation patterns within a trend. So what I did is I bought for our portfolio on the breakout through the top of that little wedge structure, bought at 28 Rand 70. We've got a stop loss here at 27 Rand 10, and the target is still 32 Rand. So and by and large, it's still fine. You can see the stock is still holding up above that upward trend. We do seem to have some sort of a consolidation happening over here recently over the last week or two. You might say that could potentially be taking the form of a little bit of a bull flag type of structure. We'll see. But for me, for the most part, this still looks fine. I think it's just a case of having to be a bit patient with it. We've got our parameters set out. Let's be patient. Let's hang on a while longer. I still am confident that it will work as things stand, but if it doesn't, we've got our stop loss, we've got our risk parameters covered, so we'll see how things go. And
you don't actually have too many trades on at the moment, so no. It's not as if you've got a lot of irons in the fire that you have to keep a close watch on.
No, that's it. We're actually fairly underexposed at the moment, so so even if this one didn't work out, it's not likely to make a massive difference to our portfolio.
Garth, you mentioned the top 40 as we started talking, so that's what you want to illustrate to sort of the graph that you want to use to set the scene for where we are at the moment. Tell us what you see there.
Yes, well, what I see here, as you can see clearly, there's still a rising trend on this on our top 40 index, a nice pattern of higher highs and higher lows, and they say the trend is your friend, so the trend is your friend and it's still going up, so I think we've got to still back this one and be bullish. What I want to just point out here, and we did discuss this chart a couple of weeks ago, at the time I said watch out for this overhead resistance area, which comes in at about 32,400, and we broke above that. And what I'd said at the time was it looked like we were forming a bit of a triangle pattern. If you have a look over there, that's a nice neat triangle. And what you typically do is you take the height of that triangle at the broadest point, and then you project it out from where the breakout occurs. And in that case, it gives us a target of 33,500 for the top 40 index. Now, what I see at the moment is we've been consolidating sideways over here, but we're holding above this support line at 32,400. So I'm still quite comfortable that this is a bullish setup, and I'll still back the fact that we're probably likely to break out to the top side of this consolidation, and we're likely to go up and meet that target of 33,500. So I'm still comfortable as things stand at the moment. I'm still bullish on this market, and I think as long as we remain above that support line, and particularly above that rising upward trend, I think that there's still upside to our market, and I'm still comfortable to have a more bullish bias as things stand.
Garth, does that stochastic though not worry you somewhat, because it does look somewhat overbought?
Well, it's come back down into more neutral territory now. But the other thing to remember about a stochastic is that it can remain overbought for a very long period of time. So it's something obviously to be cognizant of, but don't read it in isolation. Price action is always king, and your other indicators like your stochastics and so on come secondary. And a market can remain overbought for an extended period of time. I mean, if you actually have a look at what happened there from late July into late August, you can see how that stochastic stayed very overbought for an extended period of time. So for me, that's not a massive concern as things stand at the moment.
Okay, so that's sort of the bigger picture. There is a trade that you've put on for the portfolio this week, and that's Sasol.
Yep.
I think Sasol is South Africa's most loved and most hated share sometimes, because it just doesn't seem to do what everyone wants it to do.
Yeah, it does sort of disappoint on a continual basis, I guess, and people always think it should be trading higher. And I guess you're right, South Africans do tend to have a little bit of a love affair with our favoured stocks like Sasol and BHP Billiton and Anglo American. Anyway, be that as it may, we're going to give Sasol a go this week. And
for purely unemotional reasons, I trust.
Purely unemotional reasons, absolutely, as always. What I see here, a couple of things, but first of all, notice we have this upward trend, which goes back to the July lows, and you can see that each time the stock has pulled back to that trend line, it has found support, and it's moved up off that support line. The support was at 366 Rand this week, and the stock found support at that level. The buyers stepped up to the plate and started buying the stock, so you can see that that support area certainly is being acknowledged. If you also have a look at that stochastic oscillator on the top there, we've got what's called bullish reverse divergence, and I've spoken about this on a couple of occasions on the show recently, but for viewers who or not familiar with this, I'll explain it quickly. Notice how your stochastic makes a lower low, yet the share price is making a higher low within its uptrend. So what it's actually saying to you is that the stochastic indicates that the share is more oversold now than what it was on the previous pullback, even though the share price now is higher. Now that's a very bullish setup. You don't see these divergences all that often, but when you do, they're worth paying attention to, because to me that's a pretty high probability and a pretty reliable setup when you see it.
Are there any fundamental reasons other than the charts and the technical factors that would induce you to
I guess, you know, if I had to look for fundamental reasons, I think the one is that the Rand seems to be on a slightly weakening trajectory at the moment, and we know that Sasol is sensitive to the Rand, much more sensitive to the Rand than it is to the oil price. I think every 10 cents movement on the Rand-dollar exchange rate translates into something like 900 million Rand to Sasol's bottom line. So that's one possibly favourable reason from a fundamental perspective. But I'm looking more at a technical setup here. I mean, and I'm not expecting the share to go and screech off to new all-time highs right now. I'm really just looking for a bit of an oversold bounce. And what I do see there is a bit of an overhead resistance which comes and joins those prior tops. And I think we could see the stock rise to about 384 Rand, where the resistance would come in over there.
So not a huge increase.
No, not a huge increase, but you know, we've got a reasonable risk to reward ratio on this trade, because what I've done here is I've actually bought for the portfolio at 371 Rand 20. I did this yesterday. Subscribers to traderscorner.co.za would have got this and would have got an SMS alert to the trade. I also did send it out as a tweet earlier this morning to viewers. So I bought it at 371.20. We're using a stop loss here at 365 Rand, and then the target is 384 Rand. So if I put the red and green blocks up that I always do, the red block indicates the risk. In other words, from our entry price to where our stop loss would trigger, that's the red block, that's the risk. The green block is the potential reward. And you can see just by eyeballing it that the reward is about 2 times bigger than the risk in this case, which is fine. So risk to reward ratio of 2 to 1 is good. I always like to try and get 3 to 1 if I can. It's not always possible, but 2 to 1 is good enough for me. So that's what I've done for the portfolio for this week.
Okay. Can you take us through the mechanics of that trade in greater detail?
Yeah, sure I can. So we've bought at 371 Rand 20, as I mentioned. The stop loss is 365 Rand. The risk per share, therefore, is 6 Rand 20. I'm risking 2% of our account. Now, our account's sitting at about 398,000 Rand at the moment. So 2% of that is 7,960 Rand. That's how much I'm willing to lose if I'm wrong on this trade and the stop loss gets hit. We take it through our ordinary calculation that we always do. We divide the portfolio risk and divide it by the risk per share, and that gives us 1,283 shares. So to simplify it, I'm going to round it off to 1,280 CFDs, and that's what I've traded for the portfolio this week. Now, as I mentioned, the target is 384 Rand, and the risk to reward ratio therefore is 1 to 2, which is decent.
Garth, is Sasol a high beta stock as they're known? So if there is some sort of market rally, and Sasol would be a more significant rallier, for want of a better word, than the general index?
It can be. Look, it is certainly a reasonably heavy weighting in the overall index. So I suppose you could say that it's a fairly heavy beta stock. I think what's quite important to remember these days, though, is that in the past you would think of high beta stocks being the ones that had the heaviest weighting in the markets, which were typically Anglos and Billiton. And you could count them on one hand, most of those shares. And they do still have a very heavy weighting in our market these days. But what we've noticed over the last 2 years or so is that a lot of the previous sort of, I don't want to call them underdogs, but stocks that had a lighter weighting in our market have grown. Think about things like the retail shares and some of our industrials and financials that have done fantastically well over the last 2 or 3 years. And on a proportionate basis, their weighting in the index has actually increased. And then the likes of Sasol and Anglo-American and Billiton and what have you have actually underperformed on a relative basis. So their weightings in the index have therefore become smaller. So that whole concept of high beta stocks and whatever, it's still valid, but it's just not as significant nowadays as what it might have been 2-3 years ago.
Okay, interesting. So what does the overall portfolio look like? It has dipped a little bit, hasn't it? We had barreled through that mythical 400,000 Rand mark, but we seem to have retraced a little bit.
Yeah, we've come back down underneath it again. So the PPC trade has not helped us this week. So we're sitting at the moment with a mark-to-market profit of absolutely zero on that trade.
Oh dear.
So it's come back to our entry price.
At least it's not a loss.
It's not a loss. So, but anyway, there it is. You can see the trades that we've got open. We've got our Sasol trade that we just discussed now, PPC we've spoken about. And then we do still have our put spread option structure in the background, which is, at this stage, I think it's highly unlikely that we're going to see that structure working for us in this quarter.
Which, of course, was basically short of
it effectively gives us participation. If the market was to fall, if the top 40 was to fall below 30,000, then that structure starts to make money for us. And at the time that I did it, it looked like it was a smart idea to have that downside protection in place. But the market's continued higher and higher, and I mean we're now sitting more than 10% above that level. So I think it's unlikely that we're going to see the market falling below 30,000 this year.
Garth, is there anything, would you be tempted at all to go long of the top 40? Just take a simple long position at this point?
I could, because that top 40 graph that we showed earlier in the show does still look bullish, and I think certainly there's a case to be made for being long of the top 40 on that basis. I'd only become concerned if we started breaking below the support levels that I mentioned, so basically below 32,400 on our top 40 index. If we broke below there, then I'd question that bullish stance. But while we're above that level, I still think that the path of least resistance is upwards.
Before we chat about your upcoming courses, is your sense that once US markets reopen, the New York Stock Exchange, following the hurricane that has blown through the east coast of the United States, do you think we might see a bit of a retracement, or do you think markets are sort of taking it in their strides and will do okay? Yeah,
I think markets really are taking it in their strides at the moment. I mean, what you must remember is that the New York Stock Exchange has been closed, so for Monday and Tuesday and possibly even Wednesday. We're not sure at this stage. But remember that their futures exchanges are still open. That's in Chicago. So you can still get an indication of what the market's generally feeling by watching the S&P futures and the Dow futures. And those have actually, they've been relatively range bound over the last 2 days. They haven't been falling, They haven't been rising. The rest of the world's markets carry on. They haven't been falling. So I think that this hurricane will blow over, pardon the pun, and we'll carry on after that. I don't see it being a significant market moving phenomenon as things stand.
Although it does look as if the damage is rather extensive.
Sure. Yeah.
Garth, just to end off with then, the next course dates?
Yes, I've got 2 courses coming up still this year. We've got one in Johannesburg on the 24th of November and one in Cape Town on the 1st of December. So any viewers that are interested in attending one of these courses are welcome to get in touch with me. You can email me on garth@traderscorner.co.za, or you can find me on Twitter or on Facebook.
Okay, great. We'll leave it there. Garth, thanks as always for joining us
Thanks.
on the show. That's Garth McKenzie, the founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.